Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to highlight 3 key points from a 2019 Cannabis Trend Report. This coincides with a guest that we're going to have tomorrow, is Tom Howard from Cannabis Legalization News. He just got back from the Benzinga Cannabis Capital Conference in Chicago, where he's a business attorney there. And so we're going to review the Cannabis Capital Conference as well as the upcoming first ever Cannabis Investor Day. So with that, on the line with us is Dan Chemist with Good CBD Products.
Sounds like an exciting week on the Talking Hedge. Pretty neat.
Yes, as kind of the capital markets get to a point of constraint, it's interesting to see that some of these conferences are launching in newly developed states like Illinois. And so this article from Yahoo Finance goes on to say that a week after a successful Benzinga Capital Conference, investors are gathering in New York for the first ever Cannabis Investor Day, a conference held in collaboration between the OTC Market Group and the Canadian Securities Exchange. The event is targeted to individual investors, institutional investors, advisors, analysts, and on tap from C-suite executives are people from True Leaf Cannabis Corp, Flower One Holdings, AYR Strategies, TerraSend, Planet 13 Holdings, Cresco Labs, Ianthus Holdings. And so while cannabis stocks have consolidated heavily in 2019, bulls will argue that the nascent industry is still in early stages, and the relative underperformance of public cannabis companies appears not to have dampened enthusiasm for the chance to hear directly from industry executives. So although it's sold out, interested investors can also attend online via virtual investor conference. So it is interesting that, there's some stuff popping up as the markets kind of dial in a little bit. I don't know if that's more speculation, just more buzz, or maybe there's opportunities.
Yeah, further validating the Talking Hedge. It goes like this. That money's got to go somewhere, right? Right? And so, everybody looking for high yield cannabis, right?
So we're going to have another podcast later on today with Rohit Srivastava. He's a chief investment officer and portfolio manager with Saroj and Banu Fund, doing a technical analysis with an artificial intelligence-based algorithm and has predictive analytics. And so we're going to cover Hexo. And it's interesting because the difference between the technical analysis from this AI-based algorithm and what you're seeing in the paper about them laying off 20% of their workforce and some other issues that we're going to cover later on today, is really the fundamental difference between technicals and fundamentals. So fundamentals are really looking at, are you making revenue? How many SKUs you have? What's your EBITDA? And just kind of boiling that down. Whereas technicals doesn't care about that. They're looking at what's the relative strength index, where's the money flow indicators, what's your MACD or your moving average of convergence and divergence. They're looking at candlesticks and other technicals. They don't care about what's going on in the market, how much people are making. And so there's a big difference. And hopefully these capital conferences are pointing that out and what the difference is and what the long-term strategies are. Because there's a short-term play on Hexco. Long-term, wouldn't touch it with your money. But short-term, sure, trade it all day long. So there's opportunities, I think, is what I'm trying to get at. So this third annual Cannabis Trends Report from the Cannabis Center Newswire PR platform is finally out. Talks about the number of females executives that falls over 20% in 4 years. In 2015, the percentage high rankings position in the cannabis industry held women at 36%. According to the report, and today that number is approximately 17%. So the report points to the introduction of institutional capital into the industry as a reason for why new male executives may be pushing women out of the leadership positions. Workers in the industry as a whole are about almost 37% female, a higher proportion than the number of females working in both the tech and agricultural sectors. Although the number of women executives has dramatically dropped, 2019 saw a very first cannabis company led by a female CEO begin trading on the NASDAQ. So there has been a trend. There was a lot of CEO females in the medical market. There was difficulty finding enough capital to transition. Some of them didn't find it, quote, worth it. And so they have worked in a kind of the behind the scenes as not advocates, but consultants and helping other people. But there is a really low number of women and minorities in the cannabis industry. It's just predominantly white males mostly. And that's from cultivation all the way to bud tenders. So would like to see more females and minorities. I try to make it a point on my panels to have representatives of minorities and females on the podcast. It's not easy finding subject matter experts that are interested and willing to speak and available. And yeah, it's challenging.
You know what's, I don't know, demographically saddening and interesting personally is I feel like when cannabis was first legalized in Washington and Oregon, I saw a lot more diversity in the people we interacted with, right? Over the last couple of years, as the market has stabilized a little bit and gotten a little bit bigger, I don't know. I don't want to stereotype, but I see a lot more, polo shirts and sport coats and essentially fresh, young, white business degree carrying crew. And I don't know if that's good, brother.
Definitely an observation. There's a lot of people that were in the industry and no longer are. 5 years ago when I was on a subcommittee to try and implement cannabis cafes or marijuana lounges, every single person who was on that committee is no longer in the industry. And so I'm chair of the committee now, 5 years later, and you just see a lot of new people, and you see a lot less people that are no longer around. And that's also women and minorities. I do see a lot of women in Washington, the women of weed. A lot of them have not been able to make the proper transition. Some are trying to come back via CBD, and so they're trying. And I think with capital, that'll definitely help, as well as branding. And maybe that comes hand in hand. Is the second key point here is more spending on branding. We're definitely starting to see, whereas I said 2 years ago branding doesn't matter, we're starting to see companies now establish themselves as industry leaders. Either that's because of their low price point or because they have a spectacular product. Probably the former rather than the latter. But this report goes on to say that there's a growing need for cannabis companies to invest in branding efforts in order to stand out from the competition. So examples are Green Thumb Industries acquiring the luxury cannabis brand Bebo in an all-stock deal. I love those all-stock deals, don't you? Just paper, just pushing. Cannabis luxury.
I got some paper.
Right? Yeah, let me print that real quick. Cannabis luxury
Yeah, I
brand
got a lot
Coda
of paper.
Signature closed a $24 million round Series A funding for another luxury brand that it would invest $25 million to expand operations. Tilray signed a $100 million revenue sharing agreement with Authentic Brand Group. Acreage Holdings bought cannabis manufacturer from a factory in all stock $160 million deal. All stock $160 million deal. Love those. Let me just print some money real quick. So Tilray announced that it would add 203,000 square feet from its existing facilities with a $32 million investment dedicated to expanding manufacturing operations. Why don't you just go ask Hexo? Because they just stopped 200,000 square feet at their other facility because they said there's no demand. So I find that interesting because everyone's going to be shorting Hexo, and now Acreage Holding is like, yeah, we're just going to pick up the slack, I guess. So to give you an example of what I'm talking about, Hexo is going to look intriguing to some investors. This Yahoo Finance article goes on to say that the price dropped 73% in 6 months. One of those reasons is that the company's disappointing top-line performance. Their negativity pre-announced its fourth quarter sales. Net revenue guidance dropped. It was below analysts' average estimate. Stock price fell 36% in 3 days, hasn't recovered. And so the company's actual net revenue, 15 million, it increased 19% versus the previous quarter, but that 19% growth is nowhere near what they had originally projected. The company had projected 400 million in sales at the time, suggesting a 600% growth year over year. Why not just under promise over deliver? Instead you're like, yeah, we're going to do 600%, suggesting that the sales would be far worse. So it's disappointing top line performance is due partly to industry-wide pressures. Retailers have opened locations more slowly than expected, partly due to backlogs and application approvals by Canadian regulators. But a bull could argue that those delays won't necessarily hurt the outlook of their stock. But Hexco's problems go way beyond revenues. Though its weaker sales amplify issues elsewhere in the business, Hexco actually is shutting down facilities, laying off 200 employees. That's 20% of its labor force, and looking like they're responding to the fact that Canadian market seems to be poised to become massively oversupplied. Prices are already falling, which means that Hexco's production capacity will become much less valuable. So there's an exodus at top level executives, chief financial officers leaving earlier this month for family reasons, chief marketing officer and manufacturing officers being dismissed as part of an announced layoff. So they're trying to focus on profitability over revenue growth, partly in order to satisfy investors, but they're emphasizing profitability in response to the increasing worrisome cash position. So they closed their fourth quarter, raised $70 million through a convertible debenture, which is going to dilute shareholders 7%. So there's a number of very real risk factors facing Hexco at the moment. If the counter argument is that the stock has fallen rather than other cannabis stocks, it's an awfully flimsy reason to buy Hexco stock, end quote. So people are just going to look at the numbers, and if you're trading all day, great, you can make some money. But if you're investing, this one doesn't look like it is going to recover. But I guess to wrap this up, looks like trending is a number of females are dipping down, spending on brands is going up. The third and final key point is that further investment in manufacturing equipment. So, I mean, we've been touting automation for a long time, whether that's a bottling line or whether that's pre-rolled joints or blunts. Further investment in manufacturing equipment is going to come along with financing, getting funding to scale, to automate, to expand. So the article goes on to say that rise of sales of and acceptance of cannabis-derived products, the industry has a growing need to develop and purchase manufacturing equipment. That is no doubt an importance. Yeah, if you can't scale up and you can't automate, I mean, think about it. When's the last time you remember anybody rolling a cigar in the United States? It was probably 1880, and yet you have a whole team of 18 people on a line manufacturing pre-rolls. That's pretty crazy. So whether it's short sellers or a lack of automation, how the industry lives on to see another day, you're going to have to come back to the Talking Hedge to find out. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.